Right now, the fate of the entire stock market is being decided by just 7 companies. Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and NVIDIA are locked in an AI arms race, and together they now make up around 36% of the S&P 500. This high level of market concentration mirrors the irrational exuberance of the late 1990s. Back then, investors poured their life savings into any company with a .com name, driving valuations to levels the actual economy couldn't support. While AI technology offers real utility, current stock prices rely on the belief that this rapid progress will never hit a wall. When valuations outpace actual revenue this significantly, the resulting bubble becomes mathematically unsustainable. You cannot control when the market decides to correct itself. However, you can build a 3-step bubble-proof wealth system today to ensure your portfolio is ready for the impact. Preparing for this specific event shifts you from a potential victim of a crash to an investor positioned to profit from the resulting discounts. The first step in your defense system is to automate your core investments into a broad, low-cost index fund. With dollar cost averaging, a fixed monthly deposit naturally acquires more shares when the market dips and fewer when it peaks. Consistently buying through a crash leads to massive long-term growth as your portfolio captures the full force of the recovery. This strategy is only viable if you are completely free of high-interest debt. Investing with borrowed money or using excessive leverage is the single greatest risk you can take in a volatile tech market. During the .com crash, debt forced investors to liquidate at the worst time. Leverage turns a survivable dip into a total financial wipeout. Log into your brokerage account and locate a standard fund that tracks the S&P 500. Once selected, find the feature that schedules an automated monthly transfer from your bank account and toggle it to active. This automation acts as an emotional firewall. It prevents impulsive decisions or panic selling when the headlines about AI inevitably turn negative. The second step is constructing a diversification shield to defend against a collapse that is concentrated in the tech sector. Holding a portfolio made exclusively of AI and software stocks leaves you vulnerable. If the AI money machine slows down, your entire net worth is tied to that single point of failure. Reallocating into entirely different asset classes ensures that a single sector crash doesn't wipe out your progress. Also include traditional, stable assets like bonds. These provide a steady floor for your portfolio, often holding their value when stocks are in a freefall. Precious metals like gold serve as a historical safe haven. When market volatility spikes, investors traditionally flock to these physical assets to preserve their capital. Supplementary pillars like real estate and cryptocurrency can also provide returns that don't always move in lockstep with the Nasdaq. You should also consider a defensive equity class, dividend-paying stocks. Dividend stocks act as a shock absorber. Even if the share price is declining, the company continues to pay out passive cash flow, which you can use to stabilize your balance or reinvest at lower prices. Spreading your risk across these distinct categories ensures your net worth has multiple anchors, allowing your portfolio to remain resilient while the tech bubble deflates. The final active step is to increase your personal income, which serves as high-octane investment fuel. Execute one tangible method to boost your monthly cash flow now. Whether you negotiate a promotion or launch a side hustle, every extra dollar increases your capacity to build wealth. This matters because a recession is effectively a massive temporary discount on global assets. When the market hits bottom, excess cash provides a massive mathematical advantage. You are liquid when others are strapped. This allows you to accumulate significantly more shares, multiplying your eventual returns when the cycle turns back to growth. While average investors freeze up or run for the exits during a panic, your increased cash flow allows you to stay aggressive. High active cash flow is the ultimate weapon. It transforms a terrifying market crash into a once-in-a-decade opportunity to accelerate your path to wealth. You now have the 3 pillars of a resilient system: automated index funds, a diversified shield, and a plan to fuel your investments with more income. With this system in place, a major correction in AI valuations becomes a market event you are prepared to manage, not a threat to your financial foundation. This posture allows you to ignore the noise and calmly exploit the downturn while unprepared investors are panicking. To help you stay on track, click the link in the description to join the waitlist for my new free wealth building platform. Generational wealth isn't built by chasing hype. It's built by executing a resilient plan when the rest of the market loses its mind.